to help us understand the fundamentals of the outcome of the September Monetary Policy Committee meeting. And later, we will take a look at the development around the business environment as CBN cuts interest rates by 50 basis points to 27%. These are the stories we're tracking for you at this time. The Central Bank of Nigeria, the CBN, has renewed its sensitization on proper handling of the naira through the flag-off of a roadshow in Abuja. Officials of the Apex Bank at the flag-off urged Nigerians to keep banknotes clean, avoid folding, and use proper storage. CBN's Deputy Governor Operations Department, Dr. Bala Bello, stressed that the naira is more than just a medium of exchange. It represents our national pride, sovereignty, and shared destiny as a people. The Deputy Governor, represented by the Director, Currency Operations and Branch Management Department, Dr. Adedeji Adetono, said the campaign is to respect Nigeria's national symbol. The director said the flag-off is the beginning of an important journey to strengthen the currency and sustain the financial ecosystem. Acting Director, Corporate Communications Department of the CBN, Hakama Sidi Ali, said one of the objectives of the Apex Bank is to ensure the availability of clean notes. The Independent Media and Policy Initiative, IMPI, has welcomed the decision of the Central Bank of Nigeria to reduce the monetary policy rate to 27%. IMPI Chairman Dr. Amoni Akinsiji, in a statement in Abuja, said the decision aligned with the position of IMPI's analysts taken in its recent policy statement. He said the reduction, which is the first in
lowering the cash reserve ratio to 45% for commercial banks to 45% for commercial banks, while retaining 16% for merchant banks. The asymmetric corridor has also been adjusted to plus N minus 250 basis points, and trade uncertainties still pose risk in global output.
Global inflation is projected to sustain its deceleration, albeit at a slower pace due to the impact of trade tariffs and other structural challenges. This trajectory has necessitated a cautious and data-dependent approach to monetary policy easing by central banks, especially in emerging markets and developing economies.
The last MPC meeting for the year will hold November 24th and 25th, 2025. Uloma Oyimachi, TVC News, Abuja.
So, to help understand the fundamentals of the last CBN monetary policy meeting, I have with me the Director of Monetary Policy Department, Central Bank of Nigeria, Dr. Victor Oboh. Thank you so much, Dr. Victor, for joining us at this point. Of course, he joins us from our Abuja office. Let's unpack all of this now. Give us a sense of this direction by the CBN, the expected impact of this 50 basis cuts by 50 basis points on the naira, and also talk about the risk of a weakening naira.
Thank you very much, and good afternoon to all our viewers across the world. I think Uloma's report covers succinctly what took place at the 302nd Monetary Policy Committee meeting of the CBN. And going straight to your question, we expect the rate cut of 50 basis points to have some significant impact on the real economy. What we expect is that this rate cut should put a smile on economic recovery, especially in the area of lowering the borrowing costs, whose credit should be channeled towards growth-enhancing sectors. So in that case, we would expect small businesses and the rest of them to benefit from this rate cut. On the other hand, we don't expect any adverse impact of the rate cut on the strength of the naira. The reason is that this rate cut had to delay until this MPC because of the need to ensure that we have stronger and robust macroeconomic fundamentals that will be able to withstand any adverse impact of monetary easing. And as you know, those fundamentals are quite robust. Let's begin with our external reserve position. At over $43 billion, the Central Bank of Nigeria is well positioned. The buffers are strong enough to defend any external shock or internal shock on the currency. That's on the one side. On the other hand, we expect that because inflation is decelerating and exchange rate is stable, the aspect of weakening the currency through imported inflation will have zero effect. So if you put all these factors together, especially the strength of the exchange rate, the stability, and the almost narrowing gap between the BDC and the NFM shows clearly that we have very good fundamentals. There again, you will see that the onset of the harvest season brings in some, soft effect on inflation, which of course will mute any impact it will have on the currency. You know that the rate at which we are now, provide a lot of incentive for foreign inflows, capital inflows, both from the FPIs and remittances. So in that case, with very good liquidity level at the foreign exchange market, we don't expect this rate cut to affect the strength of the local currency, in this case, the Naira.
Okay, so you earlier mentioned that you expect that small businesses will take advantage of this rate cut, but how do you expect small businesses to take advantage, looking at the fact that many have actually gone to borrow from banks to upscale their businesses? How would they take advantage of this?
We expect the rate cut to be reflected in the lending rates, in the retail rates, by the banks, So what we would expect is banks to begin to reprice their retail rates. And, it's an issue of competitiveness. So I understand that a lot of banks are interested in funding those small businesses that are promising in terms of their ability to repay loans. So with this rate cut, we expect that those targeted sectors will benefit, from lower borrowing costs.
All right, so for households already struggling with the cost of living, how does this directly affect them?
Yeah, so as you know, there's a transmission process, and it's in phases. By the time the MPR is lowered, it translates to lower borrowing costs for banks from the central bank. And if commercial banks are able to acquire their loans at lower cost from the central bank, it is expected that they will also lower, their interest rate down the line up to the lending rate. And if that happens, it means that the cost of borrowing has reduced, and it will translate to lower production costs. And if that happens, it means that the price of product will reduce, and then consumers are expected to pay less for those items, thereby increasing their purchasing power and then helping the cost of living to reduce at the same time.
All right, so what are the strategies by the CBN to keep inflation in check post-rate cuts?
Yes. So the key drivers of inflation as far as Nigeria is concerned, has to do with food. And at this point in time, the fiscal authority is doing a lot, putting in a lot of effort to see that agricultural programs are funded and sustained. You've had a number of programs that the Federal Ministry of Agriculture have rolled out, including the Ministry of Livestock. So that got to show that from that angle, we are expecting increased agricultural supply, and that will help to douse the price of food. Similarly, we have some relative security, in farming, communities across the country, which again will provide some comfort for farmers to intensify production. That is on the other side. Now, another factor that drives up inflation very directly is the price of PMS, the petroleum product, especially, fuel. PMS.
Yeah.
And you can see the healthy level of competition that goes on at that market. And as we speak, we see some declining, level of prices of PMS, which of course go to show that it will help to reduce transportation costs. We saw the impact of that in the August inflation numbers. Exchange rate stability is also a contributing factor to show you that inflation will continue on a moderating trend. So if you put all these factors together, even our MPR, our MPR at 27 is still a tightening mode. We just ease slightly, which again, the lag effect of that previous tightening is going to continue to moderate inflation downward.
All right, so looking at this decision now, in all of this, I'm inclined to ask, how does the decision align with the CBN's broader goal of stabilizing the economy? Because everything you have said leads to the stability of the economy. But how does this align with the broader goal of the CBN to ensure the economy stays stabilized in the long term?
Yes. So the governor explained profoundly the need to preserve the stability of the macroeconomy. So if you look at all the decisions the CBN has, the MPC has taken, is balancing the act. Is balancing the act. The CBN has been able to establish macroeconomic stability over time. Inflation trended downward for the past 5 months. And the momentum of disinflation in August particularly was huge. There was a moderation of 1.76 percentage points between July and August, which was quite salutary. So now that we have achieved a substantial level of macroeconomic stability, it is also important to provide some headroom for economic recovery, while at the same time not downplaying all the risk to inflation. One of the decisions that was taken was to ensure that all the non-TSA public deposit accounts are now subjected to 75% CRR. That again gets to show that any excess liquidity that may, pose a threat to inflation, is now put under some form of control. So all these are factors that the MPC considered. So if you look at the number of decisions that were taken, they balance out to show that on the one hand, we want to encourage economic recovery. On the other hand, we are not oblivious of the risk and the threats to inflation.
All right, so in researching all of this, some analysts have they've said that changes in MPR does not trickle down quickly to the economy and to the real economy. How does the CBN or how is the bank ensuring that this policy decision has the intended effect, especially on consumers?
Yeah, we all know that, you know, in terms of the sticky nature, it is more sticky for interest rate to come down than to rise. Mm-hmm. Is largely a global problem. But here in Nigeria, there are avenues that provide interaction between the central bank and the commercial banks. The commercial banks are part and parcel of the economy. They provide very good, you know, functions to the proper running of the macro economy. So engagements are going on. We have the bankers committee where there's a handshake between the central bank and the commercial banks. And as I said earlier on, it's a competitive system, a competitive environment. Banks, I believe, will be ready to reflect this moderation in MPR down to the retail rates. I mean, consumers have options. If they cannot borrow at a higher rate at Bank A, they have the option to check for Bank B or C or D, as the case may be, and be able to access these loans at lower rate, reflecting the reduction in the monetary policy rate.
All right, so global economies are adjusting their rates now. Let's talk about the influence of international factors in the CBN's decision.
Okay, you are asking about capital inflows?
The influence of international factors, looking at the fact that the global economies are adjusting their rates as well. How much of an influence the factors internationally affect the CBN's decision?
Yeah, the analysis of the MPC also covers global developments. We are aware, first and foremost, of the global uncertainties around tariff, around trade wars, and the rest of them. And that is what the governor meant when he said that he's very cautious about what happened at the global level. That is on the one side. On the other hand, the MPC also took cognizance of recent monetary policy decisions taken by major central banks and also our peers at the global level. You will agree with me that the ongoing trend is more of rate cut to be able to, you know, encourage growth in a way, create jobs, and also at the same time stabilize the economy. So if you look at US, for example, whose monetary policy decisions influence largely emerging markets and developing economies, the US had just done a rate cut. And so the rate cut we have done is not going to undermine capital inflows to Nigeria, because we still have a very high interest rate that is attractive enough for foreign investors to continue to patronize our market. The same thing to other peer central banks. Ghana just had a cut of about 300 basis points, reducing, you know, their MPR down. So all this shows, when you compare our own, you know, interest rate with those peer economies, you know that we still have an attractive rate that will not deter investors from coming to the Nigerian market. So that will not have any adverse effect at all.
So looking forward, what should Nigerians expect from the next policy direction of the CBN? Do we expect more rate cuts? Because we had some analysts here yesterday who were, first of all, surprised that the CBN cut rate at this time. They said they were expecting it at the next Monetary Policy Committee meeting. So what should we expect at that next meeting? What should we expect for the next policy direction of the CBN?
Thank you very much. The outlook for inflation will guide what monetary policy we do. But much more importantly is what the data provides and the suggestion that and the direction that the data provide. What the CBN has done through its monetary policy committee was to take a decision at this point in time based on the analysis of data. The outlook showed that going to the rest of the year, we would expect inflation to trend downward. The pace will be encouraging. And if that happens, the MPC will take the best decision in the interest of the country. What I would like to say is to assure investors and all Nigerians that the outlook is very optimistic and the macro indicators are also moving in the right direction. And the MPC will be guided by data even as we approach the next MPC in November.
So you're optimistic that we will have a favorable outlook in November?
Yes, the entire outlook for the macroeconomy looks optimistic.
All right. Thank you so much for talking to us. Of course, Dr. Victor Oboh, the Director of Monetary Policy Department of the Central Bank of Nigeria. Thank you so much for talking to us.
It's my pleasure. Thank you very much, too.